All right, how's it going, everyone? Welcome back to another all stock trading video. Today, I want to talk about the market, how it dropped 831 points, why it dropped 831 points, and what to do next. Now, if you don't know, the market, pretty much every stock out there has gotten crushed in the past week. It doesn't look very good as far as tomorrow, and today was terrible. Needless to say, very bad time to be in the market if you're not a good investor. If you're a good investor, then these are the days that you practice for, because on these days is when everything is on sale. You know, when you walk in to Best Buy on Black Friday and everything is just 70% off and 30% off. This is Black Friday in the market, essentially. Now, I'm not saying go and buy companies that are broken, that will continue to fall due to lack of revenue or net income. All I am saying is that Warren Buffett buys stocks when others are fearful, and so should you. But today I want to talk about why the market dropped. So, number one, interest rates continue to go higher and the Fed does not seem like they're going to be slowing down. If you don't know by now, the Federal Reserve raises interest rates to slow down the economy in order for inflation to not get too far and make things expensive, as well as keep everything in control. Essentially, they can either do expansion or contraction, and right now they're doing a lot of contraction, which they haven't done in the past since the Great Recession, essentially. And they raised interest rates, but they're continuing to raise interest rates, and investors don't like that because that means the economy is going to start to slow down. Even though the economy just reported a 4% GDP clip this last quarter with rising interest rates, and if corporate taxes get cut off by the Democrats when they win the midterms, if it is they do, then that does not look good for the future. Second reason, companies reported great earnings, but the corporate tax cut helped a lot of these companies. A lot of the earnings that they reported, if you adjust it for the taxes, really it was a good quarter, but nothing to brag home about. And of course, the market has already taken this into consideration with the valuations. So all the tax cuts are pre-planned in. Now, Trump says that he wants to make another tax cut, propose another bill. I don't know how that's going to happen. Right now, really all the Democrats are fighting for is, one, for Trump to get impeached, and number two, for corporate taxes to go up again. So, good luck to Mr. Trump. Number three, this is very scary. Baby boomers and the average household in America is not saving money, and they're taking out a lot of debt. A lot of these families are living paycheck to paycheck, using credit cards, using loans. Of course, all these loans and credit cards and borrowing money was very easy when the Federal Reserve kept interest rates low. Now, with the combination of interest rates going higher and the lack of capital in savings by these households, $1,000 is the average amount of emergency fund cash on hand savings for the average household. If they lose their job, they are in a lot of trouble because $1,000 is not going to get you to your next job if a recession happens. So with the average household really suffering to make it if they don't get that paycheck, that could cause a recession to just keep on compounding, and suddenly everyone starts losing their jobs. Everyone can't afford to buy products, right? Everyone's talking about how consumers are buying so many products and that the sentiment amongst consumers is so strong. Well, maybe it's so strong because they're all using credit cards and debt in order to purchase products. And right now, during the good times, that's fine. But when the recession hits, let's see which credit cards come knocking and who can answer that call. Number 4, the trade war. Trump has really elongated his war with China among trade. They're doing a lot of back and forth. It started with China not cooperating. Now suddenly there's retaliation from the Chinese amongst Chinese products. There's retaliation amongst the US. And the US cannot really, they can't afford to play with trade, but China is very hard to convince because they are still a communist country. In China, it is a very corrupt system, meaning that a lot of companies don't have to guide and use the same regulations and laws that they follow here in the US, of course. Now, if China were to regulate itself and behave like a regular country, instead of the scamming, stealing, fraudulent country that it is, check on the inflation rates and manipulation of currency by the Chinese as well. If they were to do that, their economy would slow down. And right now, the Chinese market in general is in bear territory, meaning they're down over 20% on many stocks. Check Alibaba, Tencent, JD.com. These companies are huge companies that are down 15-25% due to the trade war. And it doesn't look like the trade war is ending soon, which is not good news for investors. Because uncertainty, especially when it comes to trade and prices, can impact a lot of companies, right? A lot of companies import their products from China, produce them in China. Apple. The trade war has gotten to the point where Apple is being affected. If Apple, which is the number one company in the US as far as market cap, is getting some of its products affected, you best believe that a lot of these companies are going to also be affected negatively. I also upgraded the mic. I hope you guys enjoy the better quality. I'm always looking to improve. This is a Blue Yeti. Let me know if you can hear the difference. Also, is the next recession coming, right? We haven't had one in so long. They come every 10 years. We're due for one. This could be the next recession, right? If the economy continues to slow down and the Federal Reserve keeps raising interest rates without considering that most households actually do not have the money to withstand a job loss or an emergency event, that could lead to a recession. A lot of people losing their homes, losing their vehicles, not purchasing consumer products. That could be bad. Also, midterms. Big discussion around midterms. Who is going to win? A lot of people believe that the Democrats will win. If the Democrats win both the House and the Senate, which essentially, if you're not from America, rules the country. Donald Trump does not rule the country. He is not a king. This is not a monarchy. This is a democracy. Not only will Trump struggle to advance the country and propose new bills, but he will struggle to do anything because the Democrats will more than likely try to stop and negatively turn down all of Trump's ideas, meanwhile looking for impeachment and corruption from Trump and his team. Number 7, I recommend owning safe stocks, right? So what do you invest in when suddenly every stock is tumbling 5-7%? There are some great value stocks up there. And also I want you to focus on stocks that have a lot of independence and are recession proof. Number 1, the stock needs to have a good balance sheet. If it doesn't have a good balance sheet and it has a lot of debt, which it acquired when interest rates were low, then that means it's going to struggle to pay off that debt and it will not be good for the recession. Look at the Lehman Brothers and look at JP Morgan. Lehman Brothers went bankrupt. JP Morgan had the best balance sheet, still here and going strong. Another stock that I want you to consider is Amazon. Amazon, sure, has exposure in China, but do you ever see people not using Amazon in the near future? As well as do you see Amazon not continuing to expand its online business? Jeff Bezos is a growth machine. Salesforce, Facebook, Apple, Home Depot, United Technologies. These are all companies that are going to continue to succeed in the long term and will give you a recession-proof vehicle in order to survive a recession that may be coming. I also want you to think of utilities, right? Waste management, the people that pick up your trash. I don't care how bad the recession is, you are going to want your trash to be picked up. I want you to consider a lot of companies that don't have international trade going on. Right? A terrible company to be in right now is Alibaba. Fully China, biggest company in China by far. Right now, if you're a risky investor, it's time to invest in China. It's time to invest in the tech stocks. They've all gotten hit. If you're not, don't. All I'm saying is look at the financials of some of these Chinese companies, look at the market opportunity, and it's very easy to see why you should buy. Now, don't go and buy everything now because a recession might continue to happen. What I want you to do is buy some now, right, over this period, and then wait for midterms to happen, see how that plays out, and if the Democrats win, there should be another correction or recession that is going to happen, and then you should keep buying more. I don't believe that the economy is just going to shut down and the country is going to shut down. If you're a wise investor, you invest long term, and long term, all of these companies are going to continue to rise and technology will continue to evolve. Don't miss the train. If you guys enjoyed this video, please hit the subscribe button, leave a like, let me know what you think is going on in the economy. How are your stocks faring out there in the recession? I hope you guys all are doing great. Thank you for watching and have a great day.